What is PPI or Producer Price Index? And how is it different from Consumer Price Index or CPI? What is the latest PPI telling us in terms of inflation and how is it affecting the market? This video will help individual investors to understand all these and make better decisions in investing. PPI measures the average change over time in prices where producers receive for their goods and services, and is measured by industry and also categories of goods and services. The PPI measures price change in the industry at 3 different levels. First, the raw material level or the commodity level. Raw materials such as oil, coal, mineral or agricultural products, the price are being measured at this level. And secondly, the intermediate level, which measure the prices of semi-finished products or goods. Materials such as steel, concrete for construction, or plastic for manufacturing. And those are the semi-finished products, which is in turn sold to manufacturers to manufacture finished goods. And finally, at the wholesale level, so basically finished products are being sold at a wholesale price to retailer. So those prices are being measured as part of the PPI, which give a very good indication as to whether it will lead to inflation in the consumer price, which is what we pay as consumer. While consumer prices measure the retail price that we pay on a daily basis as consumer, PPI Producer Price Index basically measures the prices that business receive at a wholesale level. So logically, we're going one step up the supply chain to see how the prices fluctuate. So both PPI and CPI is a measure of inflation in the economy. The US Bureau of Labor Statistics published the latest PPI on a monthly basis. And the detail of the data, including commentary, table, and charts, can be found on their website. For simple comparison, and here's the table, the October PPI showing that it increased by 0.2% over September. And it's actually better than what the market has predicted or forecasted at 0.4%, which is a good news. And also compared to September was actually 0.4% increase versus the previous month, August. So it looks like from a PPI perspective, inflation is kind of peaked out, which is what the market is hoping for. And this latest PPI data, coupled with the Consumer Price Index CPI for October and September, both in 6.9, it does show the market that inflation has a very good chance of peaking out, which is a good news for investors. So the market was trying to rally while predicting the Fed fund rate finally will be peak at 5% by mid-2023. However, St. Louis Fed President James Bullard mentioned last week that not so fast. According to Bullard, in order to control inflation effectively, the Fed fund rate need to be somewhere between 5 to 7%, which is an indication that the interest rates will continue to rise to that level and may even stay there for a period of time. So as investor, we still need to be very cautious as we are still going through a higher interest rate and also quantitative tightening period. I hope this video helped individual investors in better understanding PPI and on how to use that information in interpreting what's going on in our economy and the market, and be able to make better decisions in investing. If you like this video, please like, subscribe, and don't forget the notification bell. I'll see you next time. Take care.